A whole lot has happened in the stock market this week. First, we're going to take a look at the Fed's cut of 0.5 percentage point and that impact on the S&P 500, Nasdaq, Dow Jones, and the market as a whole. We're also going to pop over and take a look at what's happening in Europe, where the ECB also cut rates by 0.25% and that effect on the market. In addition to that, there was a whole lot of news around some of the biggest stocks in the world. For example, this one here with the iPhone 6 causing a wipe of 94 billion off Apple due to, I guess what you would say, uncertain demand. Another controversy is Amazon CEO telling all employees to come back into the office 5 days a week. We're going to look at why they're doing this, and is there a potential gain for employees in this, or is it just a gain for the company as a whole? And finally, we're going to take a look over at Microsoft. For those of us that are dividend investors, really good news. Microsoft announced 60 billion stock buyback and almost a 10% dividend hike as well. So all that and more today. Let's go through it. Look at the Fed's decision on Thursday. So Jerome Powell came out and I think his news was pretty good, right? Obviously, for all of us that have been following the stock market for a while, we know that the Fed has a dual mandate. One, to keep inflation low, and two, to keep employment high or at least steady. So I think they've made very good strides in keeping inflation low, or at least it's been coming down now. So they're almost at that 2% goal worldwide that people are always looking for, and even closer in the European Union, and getting there as well in the US. So they dropped it by 50 basis points to a new range of 4.75% or to 5%. So we can see from the chart here that the rates have been going up since 2022, right? So they were trying to combat inflation. So we see we got as high as 5.5%. And, this was all around, the money being printed after or during COVID to subsidize, employees, businesses and all that. So then the money supply increased. Therefore, people were buying more, etc. So there was more of that asset available. So therefore, inflation went up. But if we were to look at an inflation chart, which we'll look at in a minute, inflation has started to come down to the 2% goal. And therefore, we can see that Jerome Powell took the move to reduce inflation by 0.5 percentage point. The expectation was 0.25 percentage point, but they actually went kind of big on this one, where there was only one of the Fed chairs that voted against this, and they voted for a reduction as well, but it was only 0.25%. A better chart to look at here, which is from a news article here from Reuters, is very similar to the chart we had before. So in white here we had the benchmark in interest rate, right? So that's similar to the rate that the Fed sets. But what we want to look at here is the CPI, so the Consumer Price Index, which is essentially the measure of inflation. So you take a basket of goods, say milk, bread, whatever, and then they get kind of an average price to see if the price is going up or down. So we can see with the rate reduction here, it follows in line with the reduction in inflation. So the 2% goal is here, and we can see that the core CPI, which is slower because it kind of brings in housing and energy and all that kind of stuff, but the CPI itself is much, much lower. So we're very close. So I think this is very good timing to bring down rates, especially in the US. They're very close to 2.53%, and there are signs that the economy is weakening slightly, especially the labor market with lower job offerings, positions, etc. So really what they're trying to do here is get ahead of a stalling economy. I think the economy is still strong, but they really want to get ahead of if there's any problems in the job market. So now let's pop over and look at the ECB, and then we'll see what's been happening in the market for these kind of two news stories. So prior to the cut on Thursday of the Fed, the European Central Bank, which is for like 20 countries in the ECB, cut rates by 0.25%. So they're still lower here than the interest rate in the US. So it's 3.5%, and they already did a cut in June. So the Europeans are well ahead of the American cuts. Now they're very, very close to 2% target as well, and there's also more cuts expected in another 3 months' time, right? So, and it's the same as well. There's bets on for the Fed to be cutting as well, maybe an additional 0.5 percentage point, but in 2 cuts for the rest of the year is kind of where the money is. Now, if we were to pop over to the market and take a look at how the market is responding to this, the Vanguard S&P distributed measure here. What we can see is on Thursday when they cut the rates, it really jittered, right? The next day, the following day, it went way up, and now today on the Friday, it is starting to kind of come down, right? So I think what has happened is the market has looked at it and said, okay, this is a good thing. However, does it signal a weak economy? Or is this why they're doing this? So first it went up saying this is a very good thing. So we can see the peak here. And they went, oh, maybe this is actually signaling a bad economy or a recession. That's why they're cutting, especially the half a percentage point instead of a quarter percentage point. So we can see today it's plummeting again, but I think it will even out overall generally. So let's move on to more of the stock news more in depth here. So we had this article from Apple that's on Yahoo. So Apple are launching their new iPhone. I think it's the iPhone 16. It's kind of hard to keep count these days. And there's really not a whole lot of innovation in it, right? They're adding in this kind of camera button that, look, let's be honest, before we had iPhones, there was camera buttons on it, right? And there's also that big headliner that the Apple AI, called Apple Intelligence AI, is not going to be included on launch of the iPhone 16, which is not a positive, right? We have companies like Google, we have Salesforce, we have even Samsung that are all rolling out AI features, and Apple is slow to the party here. So we can see that almost 94 billion was wiped off, right? And Apple stock really isn't doing amazing, right? Usually there's a bit of a shoot up after the new phone is announced and released, etc. But it really seems like it's not really going anywhere here. And we can see even in the stock price, if we go up here, we can see Apple is a little bit up on the day, but they've been down a lot. The only reason they're probably up is because of the rate cut, but they've been down because, you know, there's really kind of a lack of innovation in the company recently. There's nothing brand new. They got rid of their development of the Apple Car. The goggles, the kind of virtual reality goggles are so expensive, no one's really buying them for personal use and etc. So not really a good look for Apple. But let's move on to Amazon. So a kind of a controversial take here. Amazon boss Andy Jassy has told staff that they have to return to the office 5 days a week. So they were doing a hybrid model, I believe. Obviously, they were remote over the pandemic, but now they went from a hybrid model, and now he's saying that they have to come back to doing 5 days a week. Now, why is he doing this, right? So I think this is kind of twofold. So the idea is that if you read this article here, that they're saying like that people are more productive in the office if you collaborate. So if you could see here, better set up to invent, collaborate, and be connected enough to each other that our culture delivers absolute best for customers and the business is his idea here. Now, he might not be wrong, but I think the hybrid approach is probably better to go. And you can see a lot of companies doing that, including the company I work for. They did not force people back into the office. If you could do it remote, you could do it remote. If there's an office nearby, feel free to come in if you want to, right? Now, also, what could be like under the seal here, under the carpet, is they want to do layoffs, but they don't want the heat or the kind of pressure from the media of doing layoffs. So they're saying everyone has to come back in. So they know people who are unhappy will just leave the company then, and they won't have to pay like severance, so they'll be saving money there, and they'll avoid kind of a really bad headline. But it has kind of backfired a bit because they're getting a lot of flack really for this one, but probably not as much as layouts. So we're going to finish up finally now on probably a bit better news, which is on the Microsoft announcement. On the 17th, earlier in the week, we had Microsoft announce a $60 billion buyback of stock and a 10% dividend hike. So as I own this stock, I've had immense returns. Actually, I think it might be one of my highest returning stock here. So this is an article from investors.com, and it's been all over the place for a while, right? So we can see that they're saying that, 60 billion is a big number, but it's only like 2%, right, of Microsoft. But it's good for shareholders. They will put up price. It will put up the value of the stock. And they can also see here that they're increasing their dividend by 8 cents to 83 cents. They don't really pay like a massive dividend really, but it's always a good thing for investors when the dividend price is growing. So this is the company's straight year of increasing the dividend the 20th year. We can see that the stock has risen on this news on Tuesday. If we go up here a lot of the time, we can see that we'll have to go and check the chart on Trading 212. So we can see here from the chart, so at the 17th Tuesday earlier in the week is when the news came out. We can see that there was kind of an initial spike, but it's been a lot all over the place Wednesday and Thursday, and now it's kind of starting to rebound now again. So I think they're, it's kind of a positive for the week. You can see in the last week they're up 2%. So it's obviously, it's good news, but it's not massive news either. So I think overall, It's been a bit of a crazy week, rate cuts everywhere, and it's important to note as well, not just in the US because of the rate cuts in ECB, the Bank of England decided to hold their rates steady. Their inflation is higher than the rest of Europe and the US, and the Bank of Japan decided also to hold their rates steady as well. So it's a bit of a mixed bag, right? It does seem that the trend overall is inflation is coming down, so therefore rates will come down. And it's worth mentioning as well, if you have money in a money market fund or a HISA, high yield savings account, likely your rate will be coming down. I know from my own portfolio, I was getting 4.2%. Now it's going down to 4, I think, in October. And I know from friends in the US that they were getting 5%. It's going down to 4.5. So that's all the news this week. Thank you very much for watching, and I will catch you in the next one.